So, hello, my dear students. So, welcome to another discussion for accounting for business combination. So, we'll be discussing the last topic now for business combination, which is intercompany sale of property, plant, and equipment or non-current asset. Okay, so in this video, we shall be discussing some sample problems or illustration on how to record the intercompany sale between the affiliated companies and what are the working paper eliminating entries now to eliminate this intercompany sale of property, plant, and equipment, and what is the effect of this intercompany sale of non-current assets in the computation of the consolidated net income and in the preparation of consolidated financial statement. So we have here some sample problem. First, we shall discuss some downstream transactions. So again, diba yung downstream is wherein yung selling affiliate or yung nagbenta ng property, property, plant, and equipment is a parent, while yung buying affiliate is the subsidiary. So we have here the parent acquired equipment on January 1, 2016. Okay, so yung cost niya is 900,000. So useful life is 10 years. So therefore, the annual depreciation, the parent recorded annual depreciation of 90,000. Okay, so on January 1, 2020, or 4 years after the parent had acquired the property, the parent sold the equipment to its subsidiary, no, for 600,000. Okay, so first, we shall be computing muna if the sale resulted into a gain on sale or loss on sale. So first, we'll compute for the carrying amount of the equipment. Okay, so the cost of the equipment is 900,000. Then yung accumulated depreciation natin, that is actually 90,000 times 4. Kasi diba 4 years na since the date na gi-acquire yung property. So you have 360,000. So cost less accumulated depreciation, you'll have carrying amount of 540,000. Okay, so the selling price is 600,000 and the carrying amount is 540,000. So you have gain on sale of 60,000. Okay, so what are the entries in the books of the affiliated companies to record this intercompany transaction? So C parent being the selling affiliate, of course, will debit cash for the proceeds of sale. Will eliminate accumulated depreciation, so i-recognize natin yung equipment at saka yung related accumulated depreciation. So the parent will debit accumulated depreciation of 360,000, then i-credit yung equipment for 900,000, and then yung gain on sale shall be credited to 60,000. Okay, so sa books naman ng subsidiary being the buying affiliate, of course, it will record equipment based on sa selling price. So kung magkano yung binayad ni subsidiary kay parent, then yan yung i-debit niya sa equipment na account. Okay, we have equipment credit cash for 600,000. Okay, so on December 31, 2020, okay, so of course, the subsidiary will record na depreciation of the asset of the equipment, since equipment is a depreciable asset. So therefore, the depreciation is 100,000. This is actually the cost of the equipment to subsidiary, which is 600,000, divide remaining useful life. So the remaining useful life is actually 6 years, diba? Kasi 4 years, 4 years kasi yung expired life niyan. So may remaining useful life tayo na 6 years. So 600,000 divided 6, you'll have 100,000. So the subsidiary reported depreciation expense of 100,000 for the year 2020. 1 year after the 1 year after the sale. Okay, so in the books of the subsidiary, now we have these balances. So the equipment, may balance na 600,000. Yung accumulated depreciation natin, may balance na 100,000. Also, ang depreciation expense, may balance na 100,000. Okay, so dapat, so ang purpose ng working paper eliminating entries natin is to eliminate, eliminate the gain on sale or loss on sale resulted no in the intercompany sale of non-cash assets, okay, or non-current assets, okay. Also, we need to adjust the cost of the equipment and the carrying amount of the equipment na as if the sale did not occur. Okay? So, dapat i-establish natin na yung cost niya would be back to 900,000. Then, yung accumulated depreciation niya should be the accumulated depreciation balance as if the sale did not occur. Okay? That is 90,000 times 5. Kasi for 2020, that is 5 years after the acquisition of the equipment. And then, the gain on sale should be eliminated for consolidated purposes. And of course, yung depreciation natin should be 90,000. No? Yung depreciation should be 90,000. So, dapat yung depreciation natin should be the original depreciation in the books of the selling affiliate, which should be 90,000. So, again, ng purpose ng eliminating entries natin is just to establish no, the balances of the accounts as if the sale did not occur. Okay? Okay, so we have here our working paper eliminating entries natin. First is to record the elimination of gain on sale and to correct the assets basis. Okay, so since the cost of the equipment is 600,000 and per consolidated balances it should be 900,000, therefore we'll debit equipment for 300,000. Okay? Then we'll eliminate the gain on sale, diba? And then establish natin yung accumulated depreciation that we have debited during the sale, diba? Yung entry natin during the sale, we have debited accumulated depreciation of 360,000. Therefore, pag eliminate natin, i-establish natin ulit yung accumulated depreciation of 360,000. Okay? So again, the entry would be a debit to equipment for 300,000 to bring back the cost to 900,000. We'll eliminate gain on sale and establish the accumulated depreciation at 360,000. Yung amount i-debit natin during the sale. Okay? Then, the second entry would be to adjust accumulated depreciation or i-amortize natin yung gain. Diba? We have gain of 60,000. Okay, we have gain of 60,000. So, then, i-amortize natin siya over the remaining useful life of the property, which is 6 years. So, therefore, we have 10,000 na amortization every year. No? But yung amortization, depende siya, no? Whether it's a gain or loss. So, when you amortize gain, kasi when you amortize gain, you should credit depreciation expense and you debit accumulated depreciation. Kasi, the buying affiliate recorded depreciation at 100,000, okay, but its original depreciation or yung consolidated depreciation should be the depreciation as if the sale did not incur, which is actually 90,000. This is the original depreciation, 90,000. So therefore we have excess depreciation, so sobra yung recorded na depreciation kasi of course the buying affiliate recorded based na yung depreciation niya at 600,000, which is greater than its carrying amount. It's true carrying amount, no? So therefore, we have excess depreciation. So sobra yung depreciation. So our goal for this entry, is to decrease the depreciation expense, no? So kumbaga, we have to deduct 10,000 from the recorded depreciation expense to bring back the original depreciation expense amounting to 90,000. Okay, so therefore our entry would be a debit accumulated depreciation, credit depreciation expense for 10,000. Okay, so after this working paper eliminating entries natin, so yung equipment natin naging 900,000 na. Okay, yung accumulated depreciation natin, of course we have beginning balance of 100,000 plus yung 360,000 yung first entry natin, less 10,000 na adjustment to accumulated depreciation or yung entry for the excess depreciation. So we have ending balance of 450,000. And then of course, yung depreciation expense natin recorded in the books of the subsidiary was 100,000. Then we have credited 10,000. So therefore, we have 90,000 as the adjusted depreciation expense. So here, based on these balances, diba, this is actually the supposed to be no balance of the accounts in our consolidated no financial statement. So the cost we have 900,000. Yung accumulated natin, we have 450,000. Yan siya. At yung depreciation expense natin should be 90,000. And of course, our gain on sale was actually eliminated na. No? Yan siya. Okay, so let's have balances on December 31, 2021. So, meaning second year after the sale. Second year after the sale. So, of course, in the books of the subsidiary, no, we have equipment. We have 600,000 yung balance niya. Then yung accumulated depreciation natin is actually 200,000 na kasi it's second year. Every year, the subsidiary will record or the buying affiliate recorded depreciation of 100,000. So it's on its second year na, so therefore the accumulated depreciation is actually 200,000. Then the depreciation expense is 100,000. But for consolidated purposes, the balance of the equipment should be 900,000. And then yung accumulated depreciation kasi nga it's 6 years na after the acquisition, so the balance should be the 90,000 times 6, so actually 540,000. And the carrying amount should be 360,000. And then of course, the depreciation should be 100,000. Should be 90,000. Okay, the original depreciation. Okay. Okay, so what are the working paper limiting entries for 2021? So first, the record elimination of gain on sale and to correct the asset basis. So it's actually the same entry on the first year. It's just that you'll debit the gain on sale will be debit since na-close naman yung gain on sale on the first year of acquisition. So therefore, yung gain on sale, i-debit mo na siya to retained earnings. Kasi of course, 'di ba, the working paper limiting entries kay dili man maapektuhan ang separate financial statements. Therefore, overstated pa din yung retained earnings no by the amount of gain. No? So therefore, we should debit the gain on sale na to retained earnings kasi na-close naman yung gain on sale sa retained earnings, diba? So, yun siya. Debit equipment for 300,000, retained earnings for 60,000, and accumulated depreciation for 360,000. And of course, the entry natin to adjust depreciation, okay, so, or to adjust accumulated depreciation also. So, since, ano na tayo, we are on a second year after the sale, so yung accumulated depreciation natin should be, ma-accumulate na yung 2-year na amortization na excess. So, yung accumulated depreciation natin should be 10,000 times 2. So that's why it's, diba, we have amortization of gain or excess depreciation every year of 10,000. So therefore, we are now in the second year naman, so we have 20,000 na. And then, the depreciation, no, since pag gain yung sale, diba, may excess depreciation tayo na 10,000 every year. So yung sa previous year shall be credited, will be crediting it to retained earnings, no? Kasi overstated kasi yung depreciation, 'di ba? Every year. That's why understated yung net income, no? Due to the excess depreciation. So therefore, yung excess depreciation for the previous year will be debited to retained earnings, of course. So, walang non-controlling interest since, ano man, it's a downstream transaction. So, dili mapektuhan si non-controlling interest. And then, we'll credit depreciation expense for 10,000. So, again, we'll debit accumulated depreciation for 10,000 times 2 kasi it's 10,000 amortization of gain every year. Then, it's actually second year na, so we have 20,000. We'll credit retained earnings for the excess depreciation for the previous years and then depreciation expense for the current year. So, after this, working paper limiting entries natin, of course, yung equipment will have a balance of 900,000 na. And then, Yung accumulated depreciation natin, we have beginning balance of 200,000 for December 31, 2021. Then, yung entries natin, we have credited 360,000 and we've debited 20,000. Therefore, we have a balance of 540,000. And then yung depreciation expense natin, we have 90,000. So, you take note that no, yung balances niya is same sa balances dapat yung for consolidated purposes, which is yung cost dapat 900,000. And then yung accumulated should be 540,000. And then, depreciation expense should be 90,000. So again, yung purpose ng eliminating entries natin is to bring back the cost of the asset no, to its original cost and original carrying amount as if the sale did not occur. No? And of course, to record depreciation expense no, at its original depreciation expense. Okay? No? Okay, so we'll have another illustration. We have an upstream, example of an upstream sale of property, plant, and equipment. Okay, so on January 1 to 2018, a subsidiary acquired equipment. Yung cost niya is 100,000. Its useful life is 5 years. So its annual depreciation is 100,000. It's actually 500,000 divided 5. So on January 1, 2020, so the subsidiary sold it to parent. No? So kaya nga it's upstream transaction. It's an upstream transaction. It's because yung selling affiliate is si subsidiary, then yung buying affiliate is si parent. Okay, so the cost, diba, of the property is 700,000 and accumulated depreciation is 200,000 kasi it's 2 years after the equipment was acquired. We have 200,000 yung accumulated depreciation natin. Then the carrying amount is 300,000. Okay? So the selling price is 285,000, but its carrying amount is 300,000. We have loss on sale of 15,000. Okay? And since this is an upstream transaction, diba, the selling affiliate is the subsidiary. Okay, so the parent, being the buying affiliate, will record acquisition by a debit to equipment equal to the payment. Yung payment niya kay subsidiary for the acquisition. So, the purchase price. The purchase price is actually 285,000. So, the subsidiary being selling affiliate, of course, will debit cash for the proceeds, 285,000. And then, accumulated depreciation for 200,000. So, eliminate natin yung accumulated depreciation at the same time, we will eliminate the cost of the property. So, we'll debit accumulated depreciation for 200,000. Of course, we'll debit loss on sale. That's actually 15,000. And then we'll credit equipment for 500,000. Okay? And then, on December 31, 2020, so in the books of the parent, kasi na naman kay parent ang property, so the parent will now record the depreciation of the property. So, of course, ang mag-record of depreciation, kay, of course, kakikinsa tong na ang possession, kung asa ang property, di ba? So, since the parent, being the buying affiliate, reported 285,000 or recorded 285,000 as the cost of the property. And we have 3 years of remaining useful life, diba? 3 years na remaining useful life natin. So, the depreciation should be 285,000 divided 3. So, we have 95,000. So, it will debit depreciation expense of 95,000 and credit accumulated depreciation for 95,000. Okay? Now, on December 31, 2020, so the books of the parent, so the balance of the equipment is 285,000. The accumulated depreciation and the depreciation expense is 95,000 kasi it's the first year of acquisition. But, diba, for consolidated balances, we'll bring back the cost of the asset to 500,000. Then, yung balances of the accumulated depreciation and of course the carrying amount should record, no, or i-revert natin to its balances na as if the sale did not occur. Okay, so walang intercompany sale of property that occur. Okay, so yun siya. So the accumulated depreciation should be 300,000, no? Kasi it's 3 years na after the equipment was acquired. And then the annual depreciation divided by 100,000. Okay? Then, the carrying amount should be 200,000. Of course, for consolidated balances, dapat walang loss on sale. no? Eliminate natin yung loss on sale. And then, yung depreciation, yung depreciation natin should be 100,000. The original depreciation. Yan, original depreciation natin. Okay? So, what are the working paper limiting entries natin? So, first, we have to correct to eliminate the loss on sale, no, to eliminate the loss on sale, and to correct the asset basis. So of course we'll debit equipment for 215,000 kasi yung cost is 500,000. The original cost is 500,000, and then the cost of the equipment in the books of the pair is actually 285,000. So we'll debit 215,000, and then we'll to eliminate the loss on sale, we'll credit loss on sale for 15,000, of course, and then we'll credit accumulated depreciation for 200,000, the amount we've debited on the year of sale, 200,000. Okay, yan siya. And then, of course, to adjust accumulated depreciation, so we have amortization of loss. That's actually 5,000. So if you've noticed, when we amortize gain, sobra kasi yung depreciation. No? So therefore, ang effect ng working paper limiting entries to adjust is to credit depreciation expense. Ito siya, when you amortize loss, kasi kulang yung depreciation. Okay, so therefore, you are to debit depreciation expense. Credit accumulated depreciation for 5,000. Kasi, the recorded depreciation na buying affiliate is 95,000. But, di ba, its original depreciation is 100,000. So therefore, kulang ang depreciation by 5,000. That's why we are to add depreciation expense by 5,000. Okay, so to bring back the balance of the depreciation expense, or to have the balance of the depreciation expense 100,000, which is actually the original depreciation. Okay, so you have here the balances, for consolidated balances natin. We have equipment, we have 500,000, of course. Yung accumulated depreciation natin, we have balance in the books of the period of 95,000. Plus yung entry natin, first entry, we have credited 200,000. And of course, the to adjust accumulated depreciation, we have credited 5,000. Therefore, we have 300,000 balance. Then yung depreciation expense natin, 95,000 yung record ni parent. We have adjusted 5,000. So we have 100,000. So take note that we have actually the same balances, no? We have the cost, we have 500,000. Yung accumulated should be 300,000. Yan siya. So you have 300,000 also. And then you have the depreciation expense of 100,000. Yan. And of course, yung loss on sale was actually eliminated in the first entry. Okay? So we have on December 31, 2021. So 2021 na tayo. Yan. So still, in the books of the parent, the cost is 285,000. And then, yung accumulated depreciation natin, in the books of the parent is actually 190,000. This is actually, di ba, 95,000 times 2. Kasi second year na siya after the acquisition of the equipment. Sale of the equipment to the parent. And then, yung depreciation expense natin is actually 95,000. So every year, the buying affiliate, or in this case, a parent, mag-record depreciation for 95,000. And of course, for consolidated balances, the cost should be 500,000. Then yung accumulated depreciation, since it's actually 4 years na after the acquisition, so yung accumulated depreciation natin, na original na 100,000 times 4 years, no? Times 4 for 4 years, we have 400,000. Then the carrying amount should be 100,000. And then, yung depreciation expense should be 100,000. Ito yung original depreciation. Okay, so the working paper, limiting entries for that, no? So, we'll have equipment, no, at 215,000. And since this is an upstream transaction, diba? So then yung loss on sale natin is na-close na siya on the first year of acquisition. So yung loss on sale natin should be credited to retained earnings and non-controlling interest in the subsequent years. So since upstream tayo, so may effect sa non-controlling interest yung intercompany sale. So, we have 15,000 times 0.8. Kasi diba yung loss on sale is 15,000. So, ano yun siya, i-prorate natin kay parent, which is share ni controlling, which is 80% with 12,000. And share non-controlling, which is 15,000 times 20%, we have 3,000. And of course, we'll credit accumulated depreciation for 200,000. So this is actually the same entry for the first year of acquisition, diba? It's just that yung loss and sale was credited na to retained earnings and non-controlling interest. Okay? Also, the entry to adjust accumulated depreciation, diba? We have annual amortization of loss of 5,000. So, we'll be crediting accumulated depreciation na for 10,000. Then, yung amortization for the current year, we'll debit it to depreciation expense. And then, yung sa previous year, which is yung previous year, yung sa year 2020, we'll debit it to retained earnings and non-controlling interest. Okay? For 4,000 and 1,000. 5,000 times 80%, then 5,000 times 20%. Kasi, diba, every year, 5,000 yung excess depreciation. Okay? So, then the balances, no? Yung equipment natin, we have 500,000. Is actually the same with the 500,000 dapat sa consolidated balances. Yung accumulated depreciation natin, may beginning balance din ng 190,000, di ba? Then, yung first entry natin, we've credited 200,000. And then, the second entry, no? To adjust accumulated, we have 10,000. So, they have 400,000 of accumulated depreciation balance after the working paper limiting entry. So, it's actually the same with yung dapat na depreciation, no, original after 4 years, no, which is actually 400,000. Okay? Then, of course, your depreciation expense natin, we have 100,000. Okay? So, we have here, no, the formula and how to compute for the consolidated net income, no, and net income attributable to parent with respect to intercompany sale of property, plant, and equipment. So, we have here, diba, net income for both the parent and the subsidiary, and we are to less dividend income or investment income to determine the net income from all operations. So, again, same pa din, no, na you are to determine talaga whether the sale is upstream or downstream. Kasi again, mag-adjust tayo sa income, depende kung sino yung selling affiliate. And of course, if upstream yung sale, the selling affiliate is a subsidiary. Therefore, mag-adjust ka kay subsidiary. Okay? So, yung ano natin, formula. So, if gain yung acquisition, so the recorded gain on year of sale should be deducted. No, kasi, rationale is that, in yung reported net income ni subsidiary includes the gain on sale. Di ba? We are to eliminate the gain on sale. So, dapat i-deduct natin yung gain on sale. Okay? Yan siya. Pero, okay, mag-deduct lang ka ng gain on sale on the year of sale. Okay? But for the amortization of gain or excess depreciation, di ba? Ano yung entry natin when we amortize, when we amortize gain, di ba? Yung entry natin when we amortize gain, we debited accumulated depreciation, credit depreciation expense. So, yun yung ano yung effect niya sa net income natin. Okay? Okay? It will increase na net income kasi we've reduced depreciation expense. So, it will increase net income. Yan siya. Okay? So, pero you take note na, of course, yung gain on sale to be deducted in the year of sale. Of course, the subsequent year, wala na yung, di ka na mag-deduct ng gain on sale. Okay? But yung amortization of gain or excess depreciation is every year yun siya. I-amortize mo man yung gain over the useful life of the asset. Okay? But, you just take note of the date. When was the date? When was the subsidiary, no, sold the property to the parent. So, kailan nangyari yung sale? Kasi if the sale occurred on December 31 of December 31, then of course, you are to deduct lang the gain, but you don't record amortization of gain. Kasi wala pang interest depreciation. Pero if for example, 'di ba, the sale occurred on January 1, of course, in the year of sale, you'll deduct gain on sale, pero the amortization, may amortization of gain ka na. So say for example naman, the sale occurred on like July 1. So, you'll deduct gain on sale, pero yung excess depreciation is half year lang. Yung amortization may half year lang. So, just take note of the when yung date ng transaction of the sale, yung intercompany sale transaction, yung date. Okay, so for the loss naman, di ba, for the loss, so since the net income reported by the selling affiliate, in this case, it's the subsidiary, so is na-deduct na yung loss. So, parang i-add back mo yung loss. Di ba kay, in our working paper eliminating entries natin, we've eliminated the loss. So, ang effect nun, it will increase our net income. No? I-add back kasi natin yung loss. No? Add back natin yung loss. So, yan, i-add natin yung loss on the year of sale. Take note on the year of sale. And then, yung amortization of loss, di ba? So, we have our entry for the amortization of loss, di ba? Yung amortization of loss natin, we've debited depreciation expense kasi nga understated yung depreciation, then we've credited accumulated depreciation. So, anong effect niya in our consolidated net income? Of course, since we've debited it to depreciation expense, so, mag-reduce ng net income. Okay? So, kaya nga, ang effect niya is deduction. Okay? So, you'll do the same for a downstream sale, no? Pero, of course, pag downstream, ang selling affiliate is si parent. So, kay parent ka mag-adjust. So, you'll deduct recorded gain on sale, recorded gain on year of sale. Then, you add amortization of gain. You add back recorded loss on year of sale. And then, you amortize, you deduct amortization of loss. Of course, kay parent. Then, you have your consolidated net income na, and then, deduct the non-controlling interest, share the net income of the subsidiary, no? To have the net income attributable to parent. Okay? So, that's it, no? So, we'll have another video, no? To have some sample problems, no? In intercompany sale of property, plant, and equipment. So, thank you.